Hello friends, welcome to our weekly webinar. It is 28th of July today, and I am your friend Shumoy, welcoming you all on behalf of Proficient. As usual, we are going to give a view about the current market scenario, what are most likely to happen next week across the globe in equities and commodities. So without wasting much of time, let us start with the global perspective. First of all, let us start with the US dollar. Yeah, so whatever you can see on my chart is the daily chart of US dollar index, which have done not much, which have not moved much in the last few weeks, hovering near a support zone, which is around 94. But if the 50-day moving average of 94 gets broken, then whatever I have told earlier in previous weeks is that dollar index will be weak, and if dollar index gets weaker, then all the commodities, those are denominated in dollar terms, like gold, crude oil, they are more likely to go higher, right? And that will happen if dollar index breaches its 50-day moving average, which is at 94 level. Currently it is trading at 94.5 kind of levels. A break below 93.5 will bring dollar index to the 200-day moving average, which is at around 92 level. So in that case, gold and crude oil are much more likely to appreciate. Let us have a quick glance in the chart of gold. Here we go. Okay, so this is the daily chart of gold. As you can see, it is a protracted intermediate downtrend. Prices are quoting below most of the important moving averages, and there is not much of respite. 1205, 1210 have been tested in the past 1 or 2 weeks, and it looks there is a short-term support there. But if dollar index really does not break 94 level, then there is no much chance that gold will be going higher. But in case dollar index goes below that, then we can expect some rise in gold, especially if this week's high of around 1230 region. Let me be precise about that. Yeah. High is 1235. So if gold goes above 1235 and dollar index goes below 94 level, then that will increase the odds of gold pulling back a bit. In that case, our intermediate target will be 1270 region, $1270 per ounce. So that is the next week's vision. There is the next week's view about gold. And what is the chart of crude oil saying? Yeah, this is the daily chart of light sweet crude oil. Last closing, yesterday's closing is at $68.7 per barrel region. We just broke the 50-day moving average, but $67 per barrel, that is the last 2 weeks low, and as long as it holds above that, the intermediate uptrend is likely to survive. So a sell signal will come only below $67.2 region, and unless that happens, the short-term view in crude oil also remains bullish. And as again I told you earlier, that if dollar index really breaks that level and the crude goes above $70, then the July top of $74 per barrel will be within target. So that is the overall perspective in global commodities like gold and crude oil. And let us come to equity markets. First of all, let us start with the S&P 500, which is the US large cap index. S&P 500 actually is all set to challenge its lifetime high. Last Friday there was a sell-off though. It closed lower by 2/3%. So this is really a pullback during a long-term uptrend, and all those pullbacks are buying opportunities. So 2790 region is the nearest support, and as long as it quotes above that level, S&P 500 uptrend continues, and that level is actually that level happens to be the February and March top. So the previous resistance will likely become a support region, and if S&P breaches 2800 sometimes early next week, one could take a long position in equities with a stop loss of around 2780 to 2790 zone. So having said that, let us come to our domestic market. This is the daily chart of our own index Nifty. Nothing much to say about this index, as you know. The index closed at a lifetime high. It surpassed the previous top of 11,172 region, and right now it is trading at 11,278 region. So this is a lifetime high. Most of the stocks, I am afraid to say that, however, most of the stocks are not trading at their lifetime high. In fact, way below their lifetime high. This market is very extremely stock specific. Not all the stocks are participating in this market. Especially this is the market driven by the large cap stocks. Mid cap and small caps are extremely beaten down. They are not participating at all, and the market breadth is extremely weak. So unless we are going extremely stock specific and our stock selection is damn on target, then it is difficult to be in a profitable position even when the market is trading at an all-time high. So it is very important to concentrate where the action is. So as far as Nifty is concerned, some pullback is expected, as most of the indexes, most of the momentum oscillators are extremely overbought, and 11,100 to 11,140 region will be an important support for Nifty. Once it retraces to those kind of levels, it will again offer value for buying. One thing that catches our attention is a bullish breakout gap that occurred yesterday. The Thursday's high was 11,185 and Friday's low was 11,210. So there is approximately a 25 point of gap in Nifty daily chart. So these kind of gaps, although bullish in short term, extremely bullish in short term, but they will also offer support when market retraces. So that's why this level of 11,185 will also be a support zone. Overall trend is bullish, no doubt about that, and prices are no way trading above the important moving averages. So overall view is bullish, there is no doubt about that. S&P 500, there was a weakness in Friday, so we may see some gap down opening on Monday, but as long as Nifty trades above its previous bottom, which occurred on 16th of July, occurred at around 10,900 levels, as long as Nifty trades above these levels, I do not see much of threat to the longer term uptrend. Even the shorter term uptrend remains intact above this level, and pullbacks will be buying opportunities. Overall stop loss will be 11,100 for next week. That is the view in Nifty. But as I told you, this market is extremely stock specific, and even though the index is trading at a lifetime high, not everybody are making money because most of the stocks are way below their lifetime high, especially the mid cap and small caps. And action is being seen only in very few number of large cap stocks. So we have to identify those stocks, and we have to trade only those stocks from the long side. So I'm going to tell you the name of such few stocks which we have been trading for past several weeks. And first, make it a top-down approach. Let's first identify the sectors, and then we will coming to the individual stocks. The first important sector that catches our attention is the NBFC, the non-banking financials. Uh, there are Bajaj Finance, there is Bajaj Finserv, and there are also many NBFC stocks in mid cap. They are also participating. So NBFC stocks are one of the important players in this bull market. There is privately held banking stocks, namely HDFC Bank, namely not ICICI Bank, because ICICI Bank has been weak for several fundamental reasons. There is HDFC Bank, IndusInd Bank, Yes Bank to some extent, yes. HDFC, which belongs to the NBFC group, HDFC Limited, which is also a very strong contender. Now there is another sector which is IT. Among IT, TCS and Infosys really outperforming. Infosys have been the star outperformer. Infosys have contributed a huge amount to the recent 1,000 point rise in Nifty that occurred in past several months. FMCG, in the FMCG sector, there is ITC. ITC saw some renewed buying interest, and it actually, let me open the chart of ITC. Here we go. This is the daily chart of ITC. You can see lots of breakout gaps, and the past 6 months of, not six, it is actually past 1 year of trading choppiness, right? I can see the big gap down which occurred July of last year with the introduction of GST, and that was that weighed very heavily on the ITC stock, and the stock made a huge gap down from 350 odd levels to some 300 odd levels. In the following 12 months, it made a low at around 260 levels. So the stock was actually arrested in a choppy range of 290 to 260 regions for past 12 months. This region have been broken upward, right? So previous 1 year of consolidation have been broken upward, and this consolidation will form an important base, a very strong base for ITC to push forward, to push upward. So ITC becomes one of the strongest candidates going forward, and if 280 is not broken, right, currently price is quoting at 302, then if 280 is not broken, then in all probability ITC is going to challenge its lifetime high, which is at 355 odd regions. So this will be a longer term bet, but nevertheless reward and risk favors us, and ITC will be one of the strongest contenders from FMCG sectors. Not to forget the likes of Hindustan Unilever. Yeah, Hindustan Unilever have been a stellar performer for past many months, but in the past 2 weeks, it was a bit of muted. It was muted, did not participate quite well in the recent rise in Nifty, but it is again forming a small base at around 1600 region. So presently the price is 1660. Unless 1600 region gets broken, the intermediate uptrend remains intact. Once 1680 is taken out, Hindustan Unilever is again all very likely to challenge its previous high and likely to go higher. And there are some consumer durable stocks like like Havells. Here we go. This is the daily chart of Havells. The longer term chart is extremely strong, extremely bullish. Very scarcely the stock broken its 200-day moving average, but it did not sustain, And yesterday the stock again closed at its lifetime high, which is at 625. So this is an investment quality stock, not short-term trading. I am recommending. Pullbacks will be good buying opportunity, but if you can afford a stop loss of around 570 region, then I will recommend buy in all pullbacks for the longer term. So there are many more stocks, mostly from the large cap categories, like Reliance. There is Bajaj Finance from NBFC. I would like to open the chart of Bajaj Finserv. Here it is, which this stock Bajaj Finserv saw some phenomenal rise in the past 2 weeks. Yesterday it retraced a bit. Currently it is trading just below 7,000 regions. A pullback is possible because it has been extremely overbought for past few days. But this pullback will be buying opportunities as long as it stays above 6,400 level. So these are the outperforming stocks. There is Asian Paints, Berger Paints. There are likes of Gales, HDFC Bank, as I told you, and one stock that catches our fancy, and which is candidate of the private sector banks. But as I told you, HDFC Bank is the best performer. But there is another one, newly listed stock, which catches our attention, and I would like to draw your attention to this because I have also mentioned this stock many a times in previous issues, which is Bandhan Bank, right? Bandhan Bank has put up some stellar performance, right? After its blockbuster results last week, it has shown some very good buying interest, and right now it is trading in the doorsteps of 700, and yeah, some pullback is possible here again, but very strong support exists at around 600 or 570 levels, and this is again an investment category stock. One should keep a buy position in this stock in all pullbacks. So Bandhan Bank remains in our shopping list, right? So these are the stocks that are most likely to outperform if Nifty does not break 11,100. But there are also some stocks, those are not as strong, and if Nifty really breaks its support at 11,100, then these stocks are very likely to pull back. These stocks are very likely to come down. These are downtrending stocks, and among those downtrending stocks, the most proliferating is Ashok Leyland. Among the large cap, the stock is trading below most important moving averages of 250-day moving averages. There is some significant selling pressure. The stock has already lost 1/3 of its value from its May top, and some pullback to the upside will be good shorting opportunity. Right now, 100 it is trading at 113 odd level. 115 have been working as a strong resistance. So if 111 gets broken downward, that is the Friday's low, then one could establish a selling position, a short position in Ashok Leyland. The stop loss will be 115, and the support level, the possible target could be 100 level or 102 regions. So this is one stock that qualifies as a shorting candidate. Not to forget the pharma stocks. The pharma stocks was exceptionally strong in the June, but this is only a pullback of the year-long primary downtrend, and the downtrend is again resuming. So in this pharmaceutical sector, Dr. Reddy is the most opportune candidate to trade from the short side, and one will have to keep a stop loss at around 2200 region, not 22, 2140 region, and can trade it from the short side. So there are other weak stocks also, because in fact many stocks from small cap and large cap, small cap and mid cap sectors are exhibiting tremendous weakness. They are not participating in the overall rise of the index. So these are so this is the view going forward next week. Overall view remains bullish. There could be a morning weakness on Monday, but as long as Nifty stays above its important moving averages, and most importantly the 11,100 holds, the intermediate uptrend survives. So that's all for this week. I hope you will enjoy it. Always trade with stop loss, trade with proper money management, and in case there is any doubt you want to raise, please reply to our YouTube channel. You can post your queries there, and I'll be very happy to reply to your queries. So thank you for now. Goodbye. See you next week.